I wanted to go to Hesham Shaaban, who we have on the phone. He's been bearish on Alibaba since the IPO. We've gone through iterations upon iterations of people saying that we were bashing it, we were being unfriendly to it, we weren't cooperating with the chart, we weren't, blah, 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 blah. You know what we did? We did research, independent research. And again, if you go back to the 2007 bubble, 2000 bubble, 2007 bubble, 2014 bubble in social media stocks, what Wall Street didn't do for you was independent research. So, Hesham, thank you for doing that. We appreciate it.
Thanks for having me.
Yeah, well, we do have a bit of an edge to get an exclusive with you, I heard. So I wanted to kind of tap into you on that. And just kind of get into why did this stock, Morgan Stanley's having their conference out in California yesterday. Why was this stock the #1 stock every tech investor was talking about?
I mean, there was a few things yesterday. I mean, there was a negative headlines out of Taiwan. They're basically kicking Baba out of the market right now. It has more to do with, I would say, more of a regulatory issue. Taiwan basically doesn't want to have a Singapore-based entity operating within its region. So it's more of a temporary injunction than anything else, just a negative headline. There's also Wall Street Journal pointing to questionable business practices, fake goods, and such. And then JD had a better than expected earnings release yesterday. Also added pressure to the stock.
I can't imagine there being suspect services or accounting or tomfoolery going on in China, Hesham.
Yeah, of course not. But I mean, it's one of those things where I think what we're seeing right now is it's not so much the news. I think what we're seeing is a major sentiment shift in the story.
Yeah.
It's basically what's happened since its last earnings release, which was I guess you can call it like a mini disaster, was that the street's starting to realize that there's holes in the Baba growth story, and we're not seeing the same same type of bullish headline chasing as we once were.
Now, can you spend a couple minutes on that? I mean, it's all fine and dandy to say the chart's going up, it's $118, and everybody's saying it's a great growth story. But what is the endemic growth rate problem? And again, we think in rate of change terms. What is the endemic growth rate problem here that people that bought it at 117 have to deal with at 81?
It's, in a nutshell, Baba's model can't deliver the same type of growth that Street is accustomed to or anything close to what consensus is expecting. It really comes down to who Baba's next consumer is. And what we mean by that is that Baba has historically been confused as a middle-class story, as the rise of the middle class in China. It's the exact opposite. And what's really going on there is that Baba is really a story about China's elite. And they're splurging on the site. When you compare Baba's, I mean, in a nutshell, if you compare Baba's average GMV metrics or any of the cohort commentary that they provided, and you compare that to the average consumer in China, there's really no other explanation that China's elite is really driving that model. And what happens from here is that the next new user is the middle class, and what happens is that creates a tremendous amount of pressure on that model because they can't spend nearly as much as the consumer that came on before them. Roughly 85% of the model is tied to their GMV, and when we think about the China retail part of the story, we're expecting a precipitous slowdown in GMV growth, which is going to create pressure across the entire model.
Well, that is very clear, and so is the chart now. So thanks for that. I know people like to chase charts, but again, they also like to freak out when the charts go down, Ben. So thanks for your great research on that, Hesham. We appreciate it.
Thanks for bringing me on.